Nexus. I'm here with another video. If right now you have not even subscribed to my YouTube channel, please subscribe to my YouTube channel. That's for what I can ask from you basically, so that I may see that we are actually on a progress. We are on our road to 1000 subscribers. Right now we have actually reached 200 subscribers, and I'm very much thankful, guys. And here we are actually learning day by day markets. It's very much important for you to understand that this is a strategy that you need to understand 2026. You don't need to waste your time. Just stay locked in and understand the market, how they are working. You don't need to be waiting other people to be showing you. Just learn the concept by yourself and making sure that you can get the concept by yourself. So here strictly we're going to be talking about the algorithm of today's video. So basically we're going to be talking about how you can trade in the intradays. Okay, intraday trading and top-down analysis of your charts, very much important. It's a blueprint actually. You can know it to do in the smart money ICD concepts. Okay, I want to show you guys how you can navigate your markets using actually an intraday. So for in the intraday right now, you just need to use the 4-hour time frame. You don't need to use more like a 1 week or a monthly. Just strictly just go to the 4-hour time frame, or just start with the 1 day time frame. Okay, and then make sure you understand the market bias, how the market bias is actually like. If you get the market bias, you are able to understand how the market is actually positioning itself, how the price is actually positioning itself. Very much important, guys. So make sure you understand the top-down analysis structure. If you have not yet understood the top-down analysis, there's some of the videos that I've actually talked about. It's the way you can do it. Just make sure you watch the videos that I've actually done. I've done some few videos down there. Make sure you watch them, because it's gonna help you understand the top-down analysis way of structure. But here still I'm gonna give you a way of understanding the top-down analysis. Then it's gonna give you a way of understanding the market bias. Okay, now we are here on a 1 day time frame. Then let's go to the 4-hour time frame and understand how the market is operating. Like you can see here. Okay, so you can see the market here was actually on an uptrend, as you can see here, right? You can see here the market was actually on an uptrend. So it's a bit of draw some line here, but top you can see. Let me use the trend line. Okay, it gives you the market by itself. Okay, and then if you use a very good trend line, it's gonna give you how you can navigate the market again. Okay, understanding the top-down analysis is very much important in the intraday. It's a trade. Okay, right. So here, this should be a trade that shows you it's an uptrend. Okay, so if you're dealing with an uptrend, we can see that. Okay, we can see that it's an uptrend. Okay, so the market will actually went upside here till it reached at this particular point, then it changed created a high and low. Let me see how we can see it here. Okay, let me show you very clearly. It went to this particular zone here, and then started going downwards, pushed the market downwards again, and then it continued moving upwards. Okay, so you can make sure you can learn this bias very clearly and understand how the market was very much going. Okay, and you can do a prediction of how it is. Okay, so it created this particular zone here. Let me show you. And it breaks that zone. that means actually it is what? It is actually a break of structure. Okay, and then leading of that particular break of structure, what you can see here, there are very many. There's institutional reference point. If you can see here, there's an institutional reference point using that forward time frame. And how you can know it? You can see this is a what? This is a let me show you something here. I want to show you something here right now. This is an institutional reference point. It's a what? It's an imbalance. What has it been done? It has been mitigated because it has price has done as very much as possible to come to its position. You can see. So that's actually very much important to note that. Okay, that's a market bias, alright? So you can still mark out these frames, and then so you've seen how the market is actually done, and then it's still on an uptrend. Okay, now let us mark the previous candlestick of the previous pattern. Okay, and see that how we need to understand this clearly. Let me show you. You can still use that one, and there's this trend line, this one. Okay, I want you to know that you can still even go to the 5 minutes time frame for trade entry. Okay, because this is in intraday. Intradays are very much important to understand that you can go to the 5 minutes time frame. Now we are here. Let's go to the 1 hour time frame, and then mark out how we are seeing what we are seeing here. It gives you the market bias, how it has actually worked out. See the weeks of the weeks here we have marked out. Okay, let me show you clearly. Let me show you clearly here. Yes, we are having this particular session. As you can see, the market was actually rotating on this particular zone here. Let me use this rectangle here so that you may see very much clearly. So the market was actually consolidated on this particular zone here. Okay, the market was consolidated on this particular zone here. So that's very much important to learn, guys. And then if it's consolidating on this particular zone, how do we know that it can do a breakout? Very much important to understand that the institution may create fake breakouts. Okay, they may create what? Fake breakouts. So you should be very much important to understand that you don't need to trade on fake breakouts. Okay, look at this point here. I want to show you guys how you can navigate this market very easily, so that you may be having a wonderful time when you're trading. Okay, look at this zone here. We marked very clearly, you can remember, and you have seen that this market was actually on a consolidation. So here, as a trader, you should be very much clear to understand that you don't need to be a liquidity for the institutions, because they create for you fake breakouts on market accumulations or manipulations. Okay, because you have done the market bias, so you just need to wait for a market for a position. I have some traders who say that they don't chase the price, they just wait for the price to come to their position. That's how you think like a bigger trade, like a elite trader, right? Now make sure you mark out the institutional reference point, because those are points that can be referred to. Okay, let me show you one of them here. We have very many institutional reference points, and you should mark out very clearly, because the market will do as much as possible to come to their position. Look at this one, look at this one, look at this one, look at this one, guys. Look at that one. this is a what? This is a very big imbalance. Okay, that's a very threatening imbalance. Don't look at this particular imbalance because it has been mitigated. We still have another imbalance here. Guys, make sure you don't trade on mitigated imbalances. Okay, it's one of the institutional reference points that you should be understanding. So if you are ready to risk, you may get it may subject to you to understand that the market may come to these zones to occupy these particular zones here. Okay, so that's very much important for you guys to understand. Okay, these are zones that the market will do as much as possible to come to that zone after it has done a consolidation. Okay, so let me show you how it can do. You can speculate the markets, for example, and do a match of Fibonacci using a premium and discount area. Okay, the other one is this one. Let me show you the other one. The other one is this one. Okay, so guys, let me show you something. I want to show you something, guys. Okay, how you need to understand this clearly. Since the market, you have seen this one are much. These are imbalances that should be refilled. You can mark out using a Fibonacci adjustment and make sure you understand. Starting from this point here, you can mark out and understand. Let me show you something. You can mark out and understand the premium and discount area. Okay, let me show you guys. I want you guys to understand that the importance of trading using the PDRA, the premium and the discount area. So if the markets will do as much as possible to return on this is actually 0.5. If the market comes to this zone here, let me show you. Let us mark out this point. Okay, that is 0.05, and then the other one is here. Let us mark in this zone here, another zone here, and the other zone here. And the other zone here. Okay, and then yes, guys, you can see that's actually a zone that you can see. So if the market comes to this particular zone here, and then because it has actually mitigated, it has actually occupied these particular imbalances, it's very much important to understand that, guys, you can consider buys on discount area. Okay, because the premium area is actually in this zone, then the part and the Fibonacci, and the discount area is actually in this zone. So if, for example, the market comes on this zone here, let me show you. If the market comes to this particular zone here, let me show you. If the market comes to this zone here, and branches to this particular zone, that means you can actually consider buys. Okay, you can consider based on this particular, you can actually go long. Okay, very important, very much important. You can go long on this particular area because you're on the discount area. Okay, the discount area you can go long from this particular zone. Make sure you subscribe, guys, to my YouTube channel. It's your boss Laurent. We are coming here with deep market analysis. Here we're not joking at all. We're not playing weird smart manipulation. We're actually dealing with smart money concepts, ICT ones. Make sure you subscribe, guys.